Can you make money with Palantir? And what's the best timing to start buying its shares? If you decided to search on this topic and clicked on my video, then chances are you have looked at the charts and are asking the very same questions that many of us are asking as well. Hi everyone, I hope you had an amazing day and lots of profitable trades. As we know, the job market over the past few years has been very unstable and volatile. Companies that were once considered safe havens for those seeking good employment and gainful opportunities have been reducing their workforces, sometimes closing down entire departments. And it's been a very traumatizing experience for everyone that's been involved. The inflation, on the other hand, has been rapidly increasing and eating away everything that we have saved in countries and economies that have been deflationary for decades. So when every source of certainty and assumption about the reality is about to go away, we gotta use that opportunity to remember that we need to take a step back and start working about our own financial independence. In order to secure our own financial future, we have to find the golden opportunities of tomorrow, today, and seize the ones that can multiply our capital exponentially, that may increase our capital available for later investments. So we need to find a golden goose, and for many, Palantir is exactly one of those stocks. Over the past few years, Palantir became a lot more than just another tech stock asking money in exchange of, promises. It has become a great company that plays the role of the canary down the coal mine and has enough clout and mystery to arouse the market's curiosity and people's tendency to follow any popular trend. It's a company that people would often view as a measurement for risk demand in the market alongside others such as Tesla or Apple or Nvidia. The fact that Palantir could rise and fall with the tidal waves of risk capital is a very useful tool that can help us to predict where the market and also Palantir could go next. And in this video, we're going to take a deep dive into Palantir and to see whether it deserves to have a place in your portfolio. Before the video continues, I want to take a moment to thank each and every one of you for coming to my channel, and I hope that you're going to enjoy your stay and to come back for more. If you like what you see, please consider to like, subscribe, and to check out my channel for playlists of the companies I cover. With that being said, I hope that you can enjoy my analysis today, and let's get started. Over the past few weeks, the market has seen investors' trust in the Palantir going through a lot of ups and downs. Initially coming back at the same place that the volatilities, first began to manifest themselves. The current dynamics point towards somewhat of a choppy downward slope after some profit taking that led to a mild sell-off that pushed the price down from $25 to $21, and then from 21 back to almost 25 before coming back to the same place. Right now, the price action tends to push towards, I would say, the $20 level with additional pressure from above, because the recent attempts from March to present days have all been pushed back. Probably because there are many traders with $25 as their profit taking place, since the market is yet again lacking more momentum. With that being said, we have to see more evidence before saying that the bearish tendencies are finally behind us. The current consensus is that the sell-off pressure has a combination of motives behind it, including, but not limited to, the recent announcements of a slowdown in Palantir's revenue growth in the public sector. This has been an ongoing tendency, I have to say, and as long as Palantir remains very reliant or dependent on the public sector, this is going to be an issue that's going to be used. There are also additional volatilities due to the S&P 500, as well as, I want to say, the general state of the AI scene, or rather, the AI and the speculative portion of NASDAQ. Many saw those developments and wanted to use that opportunity to take profit from their previous purchases, with the expectations that the price action will first correct themselves and then maybe push back. So the market has reacted as a result and is in the process of correcting that expectation and also digesting the current sentiments. So previously, I would say that the resistance level has been identified at $25, uh, to which, the stock has definitely struggled a lot to surpass and to this day has failed to do so. With the support levels at around $23, all the way down to like 20, it provides quite a bit of a stability, I would say, to its price movements. But of course, at the moment, the market is testing those lower end of the channel. These levels definitely serve as important markers for investors, at least psychological ones, and they indicate potential areas for price reversal. So the short-term trends of Palantir appears to be moving sideways with a downward tendency, a pretty clear downward tendency. And I would say that it's going to be even clearer if we're currently at like $24, $25 kind of region and not 21. This trend can be attributed to a decrease in both interest and volume from investors. The overall trend remains bullish, and the weakening momentum suggests a potential shift in the market sentiment. Regarding the volume, like the stock sees a trading volume that's usually around 25 to 30 million shares, and the peaks are around like 60 to 70 million. The 30-day average is around 35 million shares, and that would suggest a decrease in both daily and average trading volume. So, Palantir is currently experiencing a weakening momentum from what we see in both the price action and the volume of purchases supporting it. The short-term price movements do indicate a sideways pattern with downward tendency, and it's going to be influenced by the decreasing interest from the market at large. So, with that being said, the downward trend is certainly going to be a pretty choppy one, and I would not recommend anyone to actually, go full in on selling off Palantir just for profit. But that is like the immediate term price action. And what it tells us is that the current entry point would be, would be facing maybe a lot more downward pressure, but it's kind of unlikely to keep going lower than that. But with that being said, it's not because it has moved from 25 to 21 that's really like attracting a lot of traders. Because on a fundamental level, Palantir has always gathered a lot of interest from retail investors since its IPO. It might be one of the potential weaknesses, in fact, of Palantir's long-term outlook, the fact that institutional investors have yet to own the majority of its equity. Of course, it's quite cool for those of us who own Palantir, but you have to wonder, why people with a lot of money to manage are not trusting more of their capital into Palantir. This could be because, despite its solid business model and a positive cash flow, Palantir could be perceived as too expensive and a little bit too on the speculation side. This increased presence of retail investors also explains why Palantir is known to be a volatile or more volatile equity. And ever since its debut in the secondary market, the sentiment has been overwhelmingly reactive, with investors very eager to capitalize on any trend that may form. So they can, bank on the company's innovative data analytics or the AI, uh, trend surfing on the way up, and the tech sell-off, as well as high interest rates on the way down. Palantir's journey in the stock market has so far been pretty bumpy and characterized by intermittent periods of bullish enthusiasm followed by prolonged sell-off, dipping at one point below $10 mark. And to be honest, I remember those days. And very few people were kind of bragging about like owning Palantir when it was trading at like $7. You know, It could be a glorious thing to say now, knowing that it has almost like tripled from that price onward, but not really back in those days. So, with that being said, one significant aspect of Palantir's price movement is the correlation between its fundamentals as well as the macroeconomic news cycles to the price. Because for some stocks, it's only the macro. Like whatever the company itself is doing, it might be useful for like the short-term price action analysis, but not really for any sort of structural um, thinking. And stuff like geopolitical uncertainties, conflicts, supply chain issues, the interest rates, as well as the financial statement releases, their decision in entering into more innovative or promising sectors, or at least the announcement to do such thing, they all have like a positive effect on Palantir's price. On the other hand, the relevance of analyzing the news, I would say, is limited, but still quite useful. It's often observed that the news about the company reflect the price action. In other words, they're gonna like mold their own tone and position based on how well or how badly Palantir is currently doing in the stock market. So, for example, if things are going well, Palantir is trading from 10 to 20, there's going to be a lot of good news. There are going to be headlines that, there's a maverick CEO, they are head and shoulders above the Silicon Valley culture and so on. But in downturns, you're going to start doubting about, is all that eccentric, CIA stuff all that cool? You see what I'm saying? So all these news are going to amplify the selling pressure, and it's going to accelerate the downward trend. This is why I would say that it's quite useful to analyze the news just to confirm whether what you see from other sides, for example, the price action analysis or the technical analysis, they go in the same way that the media is now saying that Palantir is going. In other words, if you feel that things are on the way up, are the news all of a sudden very positive for Palantir? That's going to be like one of the pretty useful, handy prediction tools. So, as things currently stand, Palantir has been able to maintain its bullish trend on a medium and long term, and with some diminishing marginal increase and occasional pullbacks over the short term. The stock has shown a lot of resilience in the recent sessions, and in fact, not just the recent sessions, but recent month, and the pace of its ascent has definitely slowed, indicating a potential shift in the sentiment amongst investors. So there's a growing need for additional catalysts to sustain the bullish momentum and to push further the stock to new heights. One factor that may influence Palantir's future is its status as a large cap. The market cap has been increasing for Palantir, and it's poised to solidify its position and I would say its aura amongst the market leaders. Large cap status can bring additional institutional money, something that Palantir should get more of in order to be taken more seriously. So really, I would say that given its symbolic and size-related significance, putting money into Palantir definitely comes with its own good and, less good parts. One of the primary reasons why people want to invest into Palantir is its own potential to grow. It's often positioned and considered as a leading player in a promising sector, the data analytics and now AI. Businesses may increasingly rely on data-driven insights to inform and to improve decision-making and the operations. So companies like Palantir are pretty well positioned to capitalize on this increased demand. With its expertise in handling and analyzing large volumes of data, it stands out to benefit from the growing demand in data-centric solutions across different industries. Its own financial stability is also a reassuring factor for people who are used of Nasdaq. In other words, because it's financially sound, because it doesn't need additional investor money in order to survive, it doesn't have to like dilute the shareholders' own equity in order to have more cash to keep the ship afloat. The ship is afloat on itself. So Palantir has demonstrated its ability to capitalize on popular trend to generate significant interests from the market, and also to generate those interests in the right moment. And that's especially useful for retail traders. The strategic moves have been paying off, that's for sure, and this ability to capture the sentiment and to leverage that to its own advantage further underscores Palantir's potential for growth and success in the long run. So, investing in Palantir is not without its risks, of course. One potential concern for investors is the possibility for legal contingencies about the privacy and data ownership. The company deals with sensitive information and it may face regulatory scrutiny and legal challenges. And this can, affect its operations and reputations. The negative developments in this area could significantly impact people's sentiment and the company's perceived valuations. So, another potential downside is its possibility to have its narrative being shifted away. It's very popular to talk about AI now, but what about in a few years, right? This is in fact something that you have to make your mind for. So, if you decide to believe in the fact that Palantir is going to remain relevant, just like AI is going to remain relevant in years to come. So, at this point in time, I guess it's also useful to point out something that should have been obvious. Putting money into Palantir is not like putting your money into a savings account or a savings account backed mutual fund. It definitely has its own risks, and this is why it's, first of all, never recommended to put in more money than the ones that you can lose. In other words, as soon as you put something in, are you ready to lose it immediately? If you're fine with it, then that's probably going to be the amount that you should be putting into Palantir. And the other thing is, you definitely have to be someone who makes the assumption that yes, this industry, these sectors, those narratives are going to remain relevant in years to come. Otherwise, it's better to look elsewhere. Because a lot of companies may look very trendy or very popular at one point in time. It doesn't mean that they always will be, right? It doesn't mean that it doesn't mean that the market will always believe what they believed a few years ago. If you look at EVs, it's like a real question whether you should keep believing in that those battery powered vehicles are going to change the world. Like, at least the tone has definitely shifted from it. So right now, the global markets are facing a complex interplay of factors that have the potential to significantly influence the equities worldwide. In this speculative analysis, I believe that the consequences of the global inflation, surging commodity prices, and decline quantitative easing, as well as the rise of inflation rates or interest rates, plus the geopolitical instabilities, are going to play a significant part. The increasing inflation rate has been putting pressures across the globe, threatening the purchasing power, raising the input costs, and impacting corporate profitability. Companies operating internationally may face challenges in managing rising production costs and also to sustain profit margins. Those dynamics could trigger market volatility as investors adjust their risk-return expectations. The upward trajectory of commodity prices, including energy, metals, agricultural products, have been having far-reaching implications for various sectors of the global equities market. The companies heavily dependent on these commodities may experience squeezed profit margins, potentially affecting stock valuations and investor sentiment. The reduction or the end of QE's quantitative easing measures by the central banks worldwide may have resulted in reduced market liquidity. So, this in turn could lead to higher borrowing costs for companies seeking capital, which may also discourage investment activities or will. The elevated market volatility plus the reduced investors' appetite may also continue to occur. Now, the central banks around the world are tackling this delicate situation of balancing the inflation rates with the economic stability and, if possible, growth. Central banks opted for aggressive interest rate hikes to combat inflations. Borrowing costs for companies have been rising, which has also slowed down business activities and also fueling the market's volatility in terms of the equity prices. Now, ongoing geopolitical tensions, including trade disputes, political uncertainties, and social unrests, will inject an additional element of volatility into the global markets. Investors may adopt a cautious approach, shifting towards safer assets, impacting the equities. Additionally, the escalating conflicts may disrupt supply chains, negatively impacting the performance of international companies. Given the interconnectedness of global markets, the aforementioned factors have reverberating effects on the US equities market. Companies with significant exposure to international market may face a lot of headwinds resulting from the economic slowdowns, disrupting the supply chains and the currency fluctuations. But nevertheless, the US market is known for its resilience, and the diverse sectors may attract investors seeking safe havens. So, really, the current landscape is characterized by global inflation, surging commodity prices, reduced quantitative easing, rising central bank inflation rates, geopolitical instabilities, and also ongoing lack of certainty regarding growth. While the US market may exhibit relative strength due to the safe haven status, it's going to remain interconnected with the global economic landscape. For long-term investors, these conditions may offer opportunities to identify undervalued companies with strong fundamentals and international diversification. With that being said, short-term trades should be approached with caution because of the increased volatility and uncertainty. And also, we should be careful when assessing individual companies, sectors, or regions. So, having said all this, what is my overall conclusion about Palantir? Well, if you have watched my previous videos, basically I've been saying long term is probably going to be a good call, but short term though, it's going to depend on, first of all, your assumption, and second of all, if you believe that like the sector itself is going to remain a popular one in the years to come, because you do have to make this assumption in order to put in significant amount of capital into this company. I personally make the assumption that yes, it's going to be the case. But with that being said, you should also decide how much money you want to put in. Personally, I would say that if you believe it's going to remain relevant, then something like 10% would be a good place to start. And if you're quite 50-50 about it, for example, you may think that, oh, right now it's positive, but what if in a few years everyone is going to be like, well, that's the moment of the actual internet bubble, right? Are we going to continue to believe that? Or are we going to actually think that actually, like, maybe that wasn't the the best choice ever. So because of this, if you're 50-50 about it, but you don't want to miss out, in other words, some kind of, lightweight FOMO, then it would be an interesting idea, at least, to like keep a certain portion of it in Palantir, but not to like overdo it. So I would say maybe something like 3%, up to 3%, might be a good place to start. So because of that, I would say that if you ask my recommendation, it's still going to be, yes, I recommend you to buy it. I recommend you to hold it. But I would also recommend you to like hold it for a number of years. So we're going to assume that Palantir is going to become much more significant and mature in the years to come. And as a result, I would say that it's going to be a pretty smart move to buy some Palantir shares now, and to hold it for the next 12 to 24 months. How much should you buy at the present moment? I would say that you should buy maybe 5% of your allocated amount. So if you're allocating, say, 5% of your capital, then it's going to be 5% of 5%. So if that's the case, then every single time that like Palantir dips from where we're buying now, so right now it's like $21. If it dips to $18, you're not gonna suffer. You know what I mean? You're not gonna have the tendency of like liquidating your position immediately now and then. So because of that, yes, I would recommend you to put in like 5% of the allocation now, and then to gradually add in over the next couple of months, so that you can ride out like the initial volatilities, and that would be probably the best way to go.